Ever heard of a company that says they're all about sustainable energy, but their financials are, well, a little shaky?
Sounds a little risky.
That's exactly what we're looking into today with Energy Focus Inc.
EFOI.
Yep, EFOI. They say they're leading the way in green solutions, but we're going to see if their claims hold up. So if you're into sustainable investing and, want to make sure you're not being greenwashed,
Which is a big problem these days.
huge problem, hit that subscribe button.
Yeah.
Because that's what we do here. Separate hype from reality.
Absolutely. So are we talking solar panels, wind turbines? What exactly does EFOI focus on?
Well, they're all about LED lighting and solar tech,
Ah,
mostly for commercial buildings, the military, even homes.
okay, so like energy efficiency stuff.
Yeah, and they claim they can cover something like 80% of indoor lighting needs in commercial and industrial buildings.
80%. That's a pretty big slice of the pie, especially when you've got giants like Philips and GE in the mix.
Exactly. My thought, too, how can they compete with those guys?
Well, the industry itself is booming. It's projected to grow more than 8% every year, so there's definitely potential.
Right, but that also means more competition.
For sure. And there are some inherent challenges, too. High upfront costs for these systems, making sure they work with older infrastructure, and even just maintaining consistent light quality with LEDs can be tricky.
So it's more than just swapping out a few light bulbs.
Way more. And that makes me wonder what EFOI thinks gives them a competitive advantage.
They say it's innovation and partnerships.
That's what they all say. But their financials tell a bit of a different story. And that's what we're going to dig into today.
Okay, I'm definitely intrigued. Let's start with the leadership. Who's running this ship?
Well, they brought in a new CEO back in 2022, Leslie Matt, who's got over a decade of experience in the industry.
Okay, so someone who knows their stuff.
Yeah, and since then, they've been trying to turn things around, focusing on cutting costs and getting more financing.
That kind of sounds like a company that's struggling, doesn't it? Makes you wonder how open they're being with their shareholders about all this.
Transparency is key, especially when a company's going through tough times.
Absolutely. And that leads us to the not-so-fun part, EFOI's financial health.
Yeah, this is where things get a little, well, less than ideal.
I got that impression from the reports we've got.
Yeah.
So get to us straight. What are the red flags?
Well, their revenue's been going down, they've got a negative net income, and their return on invested capital, the ROIC, is way below the industry average.
Okay, for those of us who aren't financial experts, break that down. What does all that mean?
Basically, the ROIC tells you how well a company's using its money to make more money.
So a low ROIC means?
They're not generating enough profit from their investments, which makes investors nervous, obviously. And then there's the fact that they rely heavily on government contracts.
Which can be unpredictable.
Exactly. It adds another layer of risk to their financial stability.
So we've got declining revenue, negative income, heavy reliance on government contracts. Not exactly a recipe for success.
Not exactly. But it's not the whole story. We'll dig into the rest after a quick break, so stick with us because it gets interesting.
We'll be back in a flash with more on EFOI. But in the meantime, if you want to check out the sources we're using for this deep dive,
All the reports, analyses, all that good stuff.
it's all linked in the description below. And hey, while you're down there, let us know what other stocks you'd like us to investigate.
We're always looking for new companies to take a deep dive into.
So drop your suggestions in the comments and we'll see what we can do. So before the break, we were talking about EFOI's less than stellar financials.
Yeah, not exactly painting a pretty picture.
Nope. So let's zoom out a bit, look at the bigger picture. How's the market feeling about EFOI? What's the sentiment like?
Well, their stock has been on a bit of a roller coaster ride lately.
Oh yeah, I saw that. Big surge in price.
Yeah, but it seems to be driven more by speculation than, actual good news.
So not the kind of surge you want to see.
Right, it's not really based on anything solid. And that ties into another thing that's a little, interesting.
Okay, lay it on me.
Institutional investors, they're not exactly jumping on the EFOI bandwagon.
What do you mean?
They only hold about 3.67% of the stock.
Wow, that's surprisingly low. Why do you think that is?
Well, it could signal that they're not convinced about the company's long-term prospects.
Makes sense. So if the big institutions aren't buying, who is?
Insiders actually hold a much bigger chunk, over 33%.
That's a lot of insider ownership.
Yeah.
That could be a good sign or a bad sign, right?
Yeah, it's a bit of a double-edged sword. On the one hand, it shows that the people closest to the company have faith in it.
They're putting their money where their mouth is.
Exactly. But on the other hand, it raises questions about, whose interests are really being served.
Are they making decisions that benefit all shareholders? or just themselves?
That's the question, isn't it? And it gets even more complex when you consider the overall ownership structure.
We talked about low institutional ownership, but what else should we be looking at?
Well, with so much stock concentrated in the hands of individuals and insiders,
It makes you wonder if the little guy's voice is even being heard.
right, are minority shareholder rights being protected? It's something to consider.
Huh.
And then there's the issue of conflicts of interest.
Yeah, that's a big one.
With so much concentrated ownership, are decisions being made that benefit everyone equally? Or are certain groups getting preferential treatment?
These are all important things for investors to think about, not just the numbers.
Absolutely. It's about understanding the dynamics within the company, who holds the power.
Okay, so we've got financial instability, low institutional ownership, concentrated ownership,
To really get a handle on all this, let's do a classic SWOT analysis.
strengths, weaknesses, opportunities, threats.
Hmm.
Always a good way to get a complete picture.
Exactly. So, starting with strengths, EFOI's commitment to sustainability is definitely a big one.
Yeah, they're riding that green wave.
And they're operating in a rapidly growing market. Plus, they've got that strong foothold in the military sector, especially with the Navy.
Good points. But let's be real. We've already uncovered a bunch of weaknesses. What are the big ones?
Well, their inconsistent financial performance is a major red flag. Declining revenue, negative income, heavy reliance on government contracts.
Yeah, not great.
Plus, they haven't really expanded beyond the U.S., which puts them at a disadvantage compared to their global competitors.
So they've got some work to do. But what about opportunities? Any bright spots on the horizon?
The demand for energy-efficient solutions is only going up, so that's a huge opportunity. And they could really benefit from tapping into those smart building and IoT trends.
Right, jumping on the smart tech bandwagon.
Exactly. And of course, the global push for sustainability plays right into their core mission.
So some potential there. But every company faces threats.
Yeah.
What's EFOI up against?
The competition in the LED market is fierce. They're going up against some really big players.
With deep pockets and name recognition.
Exactly. And technology is always evolving, so there's always the risk of becoming obsolete.
And we can't forget about those unpredictable economic conditions. That's always a factor.
Right. And then there's the regulatory environment, which can change quickly and create either obstacles or, new opportunities.
So after looking at all these different angles, the strengths, weaknesses, opportunities, and threats, what's the verdict on EFOI?
That's the million-dollar question, isn't it?
Yeah, it's a tough one. They've got potential, but also some serious challenges. It's like they're walking a tightrope.
Exactly. They could really take off, but they could also fall hard. It all comes down to how much risk you're willing to take.
It's a real puzzle, isn't it? A company like EFOI, working in a hot industry, but just bogged down by these financial issues.
It's tough to make a call. From a purely number standpoint, they're not in great shape, that's for sure. Declining revenue, negative income, those are big red flags.
Yeah, not exactly inspiring confidence.
Mm.
But they are focused on sustainability, which a lot of investors are looking for these days. And they do have that solid military contract business going.
True. It's a mixed bag. Some good points, some bad. It makes it really hard to say for sure whether EFOI is a good investment or not. It depends a lot on your personal risk tolerance and, what you're hoping to get out of your investments.
Which is why it's so important to do your homework. Don't just take our word for it. Dive into those sources we linked. See what other analyses are out there. Make your own decision.
Absolutely. We're just sharing our perspective based on the research we've done. We're not financial advisors, so ultimately the decision is yours.
Exactly. We're more like research buddies, I guess, helping you navigate this whole world of sustainable investing.
Good way to put it. It's a fascinating world, but it can be confusing, for sure.
Definitely. So before we wrap up, I want to leave folks with something to think about. EFOI's situation kind of highlights a bigger issue. How can we, as investors, be sure that companies that claim to be green are actually doing what they say they're doing?
That's the key question, right? Greenwashing is a real problem, and it's getting harder and harder to spot. Investors need to be able to tell the difference between real sustainability efforts and just clever marketing.
So as you're exploring this world of sustainable investing, remember to dig deeper. Don't just go by the headlines. Ask the tough questions. Demand transparency from the companies you're looking at.
Sustainability is a journey, it's not a destination. There's always more to learn, more to question, more to do to build a truly sustainable future for everyone.
Well said. And on that note, I think we've reached the end of our deep dive into Energy Focus Inc.
It's been a fascinating journey, for sure. Lots to think about.
Definitely. So if you enjoyed this deep dive, don't forget to hit that subscribe button and join us for more.
We'll be back with more deep dives, uncovering the truth and helping you make informed investment decisions.
Until then, stay curious, stay informed, and keep asking those tough questions.